Hello and welcome back to another episode of Hot Stocks with Jimmy Jackson. So today we're going to be talking about the best stocks to own during a world war and what happens to your investments if the world suddenly plunges into war. I know it sounds extreme, but let's be real. With rising geopolitical tensions, it's a question more and more investors are quietly asking themselves. So today we're looking at what history tells us about wartime markets and, more importantly, what kind of stocks have actually benefited during global conflict. So stick around. This might be the most important investment strategy you hear all year. Let's get into it. During times of global war, stock markets don't behave the way you might actually think. Yes, they're volatile, but surprisingly, they don't always crash. For instance, during World War II, the US stock market actually rose over the course of the war. Why? Because once the initial panic had passed, the economy shifted into hyperdrive with government contracts, defense production, and lots of resource demand. The key takeaway here, not all stocks suffer during war. In fact, certain sectors thrive. So what are the best stocks to own during wartime, you might be asking? Let's break it all down. Here are the 5 types of stocks historically known to perform well during wartime. Number 1, defense and aerospace. Yep, this one's obvious. When governments gear up for conflict, companies like Lockheed Martin, Raytheon, Northrop Grumman, and BAE Systems rake in contracts. These stocks often outperform the broader market during military escalations. Number 2, energy or oil and gas. Wars often disrupt global oil supply. That sends prices soaring, and that benefits companies like ExxonMobil, Chevron, and Shell. Energy becomes not just profitable, but absolutely essential. Number 3, industrial and infrastructure. Think Caterpillar, General Electric, and major materials providers. Wartime production demands a lot of heavy machinery, steel, and logistical support. These companies help to power the war economy behind the scenes. Number 4, agriculture and food production. Wars strain supply chains, so food security becomes top priority. Companies like Archer Daniels Midland, Bunge, and fertilizer giants like Nutrien can benefit from soaring demand. Number 5, cybersecurity and tech infrastructure. Modern warfare isn't just tanks and bombs, it's digital. Cyber attacks and surveillance rise, and companies like Palantir, CrowdStrike, and Booz Allen Hamilton are critical players in defense data and digital security. Okay, so now what to avoid? Not everything does well in a war. Travel and leisure stocks like airlines, cruise lines often take a big hit. Luxury brands and high-end retailers, as consumers tend to pull back on the non-essentials. And emerging markets, these can become highly unstable and risky during conflicts. So in short, focus on resilience and utility, not luxury and speculation. Okay, and here's the bottom line. In a world rocked by conflict, your investment strategy needs to shift towards stability, defense, and necessity. Energy providers, agricultural producers, cybersecurity firms, defense contractors. These aren't just stocks, they're strategic assets. And if you want to know exactly what I'm buying if tensions keep rising, head over to www.hotstocks.vip. You'll get access to my full portfolio, daily updates, and deep dive reports on every major stock we cover here at Hot Stocks. So this is the time to think smart, plan ahead, and invest with confidence, no matter what the headlines come next. Thanks for watching, and I'll see you in the next episode.